And it's that time again to do 55 minutes around the world of business on Business Incorporated. Here's what's coming to your way on this episode. Look at the state-run electricity company of Ghana, which has cut power supplies to the parliament over a debt of 23 million Ghana cedis. And there's a warning of tax hike in South Africa over the National Health Insurance Bill implementation. And in Kenya, it's inflation tapering. But what are the drivers? We'll discuss that here on the program. Good afternoon. Welcome to Business Incorporated. I'm Ini John McQuarrie. We'll start from the global space. Now, oil prices edged up on Friday and were set to end the week modestly higher as markets await an OPEC Plus decision on supply agreement for the second quarter of the year amid differing demand indicators and key consumer U.S. and China data. Brent futures for May climbed 27 cents, that's about 0.33%, to $82.18 a barrel, while U.S. West Texas Intermediate crude rose, that's for April, 20 cents, that's about 0.26% to $78.46. WTI is on track for at least a 2.5% increase this week, while Brent is holding near last week's settlement price. Brent has hovered comfortably above the $80 mark for 3 weeks now. And a survey shows that the Organization for Petroleum Exporting Countries pumped 26.42 million barrels per day this month. That's in February, beg your pardon. It's a new month today. And that's about 90,000 barrels per day more than what was pumped in January. Libya output rose month on month by 150,000 barrels per day. A decision on extending the cut is expected in the first week of March. That will be from next week. In the grain space now, Chicago soybeans edged high on Friday with the market recovering from last session's 3-year low, although large South American supplies and lackluster demand for U.S. cargoes are expected to curb the upside potential in prices. The wheat market faced headwinds from ample Black Sea supplies. The most active soybean contract on the Chicago Board of Trade added 0.4% to $11.45 for a quarter of a bushel. A market dropped to its weakest since November 2020 at $11.28 for half a bushel on Thursday. Corn fell 0.1% to $4.29 a bushel. Wheat also went down 0.5% to $5.73 for half a bushel. For the week, corn is up 3.7%, the market's first weekly rise in a month. Wheat has added less than 1%. Soybeans largely flat. Well, short covering by speculative investors had helped grain market bounce off lows. But plentiful supply in the Americas and Black Sea region is likely to keep a lid on prices. Still staying with grains now, Zimbabwe plans to import 1.1 million metric tons of maize over the next year. And this is according to local media as the country seeks to limit the impact of an El Nino-induced drought on food security. El Nino, which is a natural climate phenomenon in which surface waters of the central and eastern Pacific become unusually warm, causes changes in global weather patterns and is expected to hit crop yields during the 2023-2024 farming season. The Grain Millers Association of Zimbabwe told lawmakers that it had already secured 600,000 metric tons of maize import contracts. And last December, during an extended spell of dry and hot weather, Finance Minister said that maize harvest could be reduced to 1.1 million tons in 2024, down from about 2.3 million previously, and that's because of the impact of El Nino. The Southern African country requires 2.2 million tons of staple grain annually for human and livestock consumption. Still staying with food now, but here in Nigeria, as farmers are worried that food prices may continue to surge till late next year because of lack of some necessary actions which should be taken. The Chief Executive Officer of Farm Credit NG, Mr. African Farmer Mogaji, was earlier on the program on Business Morning, believes that though the problem cannot be averted, it can be managed, but only if urgent steps are taken now.
A basket of tomatoes is likely to hit between 80,000 to 120,000. Why? Because climate change and also cost of production. In the north now, we're having reduced food supply. And so that's what warranted one of the governors to say, we won't take food, So around this time, every year, May, June, there's generally a shortage of tomatoes, fresh corn and co across the country. The northerners use irrigation and they use government irrigation. They stop the waters around March. Okay, so they don't have enough water and prepare to grow rice because the lands they use is like fish pond. So the waters can't flow out and it destroys things like vegetables. Now, the Southwest or the South generally have not leveraged the opportunity of the lands they have and some irrigation facilities. So there's always a major shock in May, June. So this year now, when the South is not preparing and the North is facing insecurity and some challenges also, there's going to be a big challenge. And also, this factor, many people are not paying attention to it. When we began to force merchants to open grains, when we say they were hoarding, they run legitimate businesses, okay? And many of them are indebted to banks. Banks are facilitating those transactions. Now, government, the people in government don't understand that the merchants don't only own the grains, they own the trailers. So when it is time to bring the food in May, June, they may hit back, just like it happened in 2021. So government does not control the logistics. It's those same people that are making losses currently that would want to hike the prices. They control that chain. So understanding information, understanding how the sector works with the right information. Right now, we're not getting it right.
Yeah, well, sounds like a worrying situation there in Nigeria. We'll stay on that issue by next week. Now, let's leave the food area now and go to metal, where gold prices hovered near a month high on Friday after data suggested easing U.S. price pressures, while traders await remarks from several Federal Reserve officials. Spot gold edged up 0.1% to $2,046.09 per ounce after hitting $2,050.59 on Thursday. And that's the highest level since February the 2nd. U.S. gold futures were flat at $2,054.60, according to data. And then inflation in January, which we had out yesterday, rose 2.4%, the smallest annual increase since February 2021, after a 2.6% advance in December. Now, U.S. central bankers are focusing on overall progress on inflation that they say will likely set the table for interest rate cuts later on this year. That's in the United States. Lower rates boost the appeal of non-yielding bullion. Money market pricing shows traders are pricing in 3/4 point U.S. rate cuts for 2024. Now, back to the metals now. Spot platinum climbed 0.8% to $882.60 per ounce. Palladium rose 0.7% to $948.38. However, both posted a second consecutive month decline, with palladium touching more than 5-year lows of $849.13. Platinum Group metals producer Impala said that platinum could shut some of its loss-making South African mining operations of metal because of deteriorating prices and for restructuring efforts, which seem not to have improved margins. Spot silver rose 0.5% to $22.79. From the market now, let's look at a survey on financial inclusion by A2F. It's obviously for 2023. See what they tell us, or what it tells us about especially gender recommendation and gender inclusion in Africa. We are going to speak with Chinasa Collins-Ogbo. She's the head of Inclusion for All in Athena. Hi, Chinasa. Good afternoon. That obviously wasn't Chinasa. Hi, Chinasa. Good afternoon.
Hi, Amy. Good afternoon.
Yeah, good to be speaking with you and talking about financial inclusion, gender inclusion, and all of this. We seem in Nigeria to be so hit by high cost of living now that one might even ask, do we need to be discussing issues of financial inclusion at this time? How important is it in the midst of this high cost of living?
Fantastic. And I think that, you've asked the question the right way, because when we start to talk about financial inclusion in light of, the current economic conditions, it may seem far removed from people's realities. But what I'd like to start with first is give a quick definition of what financial inclusion is in the Nigerian context. So it's basically an outcome that means that all Nigerians have access and use a broad range of financial services that meet their needs at an affordable cost. So if you start to think of savings accounts, insurance products, pension products, basically tailored to meet the different needs of different segments within the society. And so we continue to advocate for financial inclusion because it's a lifeline for people. It's actually a resource that people can depend on to build their resilience in the event of shocks. Now, coming to your specific question about the current high cost of living and what that means for financial inclusion, we know that there's a direct correlation, right, between financial health and financial inclusion. So financial health is just basically how an individual is able to cope when there's shocks in the economy. How are they able to cope and weather the storm, if you like? And what we find is the people who are financially included, the people who have bank accounts, who are backed and use a range of financial service products, have higher financial health, which means that they have more resilience in the face of these challenges. Now, in the 2023 A2F survey, which you referred to, one of the top barriers that we identified as one of the top barriers to opening a bank account or even being financially included is little to irregular income. So just basically people saying that I don't have enough money to even start to think of a bank account or even start to think of other financial service products, right? And we also know that there's a strong correlation between poverty and financial inclusion. So the poorer people are less likely to have bank accounts or to be formally financially included. So high cost of living just basically means that you have lower disposable income and your priorities change. You start to think of the most basic needs. You're not thinking of having a bank account or thinking of the complex savings financial service products that we're talking about that helps you build resilience. So people right now are just focusing on their basic needs, on the things that they need to survive. It's basically survival of the fittest. However, the people who are included are less at risk of the shocks because they have savings, they have investments to fall back on. They have all these support systems in place within the formal financial services that helps them deal better with these shocks. So in terms of high cost of living and the relation to financial inclusion, our goal is to make sure that people start to see how financial inclusion is actually an enabler for them in terms of being more resilient in the events of these shocks in the economy and how to build better for the future, basically.
Yeah, I bet a lot of people will want you to do more explanation. I just want to survive. Can I just eat and sleep for today? But I mean, the survey also shows that there's been improvement. It says nearly 3 in 4 adult Nigerians are financially included. And that's when we compare 2020 till 2023, which is the focus of the survey. That's good news. But do we know the drivers?
Yes, Sini, we do know the drivers. And let me start by saying that, there are a number of drivers, but the primary driver, I dare say, is the regulatory environment. We've had a relatively nimble regulatory system that has actually then created an enabling environment by evolving with critical trends that can accelerate financial inclusion. So what that basically means is the regulators over time, given an example, when I started banking, my banking career, and when the whole financial inclusion issue started with, trying to bank the underbanked, the regulatory environment was not ready for it. We didn't even have KYC requirements that spoke to the sub-segments that we were targeting, which are the poorest of the poor, who don't have formal ID, etc. So we've had an evolution in the regulatory environment that has then created one of the specific or a couple of the specific drivers for the outcomes we saw in 2023 with the A2F survey. So with that enabling regulatory environments, we have fintechs that counts for a significant proportion of the growth in formal financial inclusion. So we saw that in 2023, 12% were primarily driven by non-banking channels, so the fintechs, the mobile service agents, and that's from a 5% base in 2020. For instance, the non-bank players, the fintechs particularly, were responsible for 90% of the 64% formal inclusion that we recorded in 2023. You can use an example of Paga, for instance, that has over 19 million users. Paga is one of the fintechs that, have benefited from a regulatory environment that's enabling. We also have the adoption of financial service agents, so what you know as the mobile banking agents, who recorded an extraordinary increase from 4.4% in 2020 to 54% in 2023. Benefiting about 11 million financially excluded people in Nigeria. And this is also a fallout of one of the initiatives of the Central Bank of Nigeria. So talking about regulatory environments being enabling, the shared agent network expansion facilities, right, is an initiative of the CBN that has basically driven this growth in terms of agent networks and alternative banking channels that are non-banking to drive financial inclusion.
So we know that in Nigeria, we largely have an informal economy. And I guess that's why one of the drivers of that, it will be the non-bank formal services. We now use USSD. You don't need to have internet and things like that. But have we explored that enough? And then can we look at some of the risks, the challenges, issue of fraud, issue of poor service, issue of infrastructure, charges, sometimes you get charges on your phone and you're wondering, that can be a discouraging factor for a lot of people, so
yes.
Have we explored this area enough to make it safe to get the trust of the majority in the informal sector?
Fantastic question, Ini. And just to speak to whether we've explored it enough, I think that it's work in progress. We're continuing to improve upon it. And I think as you know, with anything that's innovative, the other side of it are the risks and challenges that arise with that. And so when I talk about the nimble regulatory environment, it's also testing and learning and taking from those learnings and improving and building around some of those challenges. Now, speaking specifically to the impact of fraudulent activities and all the challenges that come with banking using formal channels or digital channels, we know that it has a huge impact on levels of trust, and trust is a very key ingredient, if you know, of playing in the financial service system or participating in that system, because you're essentially saying, if I give you my money, I trust that it's safe with you and I can get it when I want it and without any challenges. My money is safe. That's what we're preaching, and that's what the whole essence of trying to get people to bank in the formal financial services system is about. However, I can give you also some of the data, from the A2F survey. So we know that about 52% of Nigerians from that survey highlighted that information on financial products and services are not easily understandable. So that's the challenge of making sure that service providers are very intentional about how they communicate with their different segments. So you have to understand that different segments speak different languages, and how are you ensuring that they're getting information that they need to get to continue to strengthen their trust in your system. Another 37% are not satisfied with the customer support, and then another 19%, talk about bank platforms always being down. So even you and I, Ine, I know that if my banking app is down, I can get a bit flustered. So imagine someone in hard to reach rural community that doesn't even know what's going on. You imagine what that can do to their psyche and the level of trust, right? So trust is a very key element. And one of the ways that I believe the regulators are ensuring that this trust does not get further eroded and they ensure that, the interests of the consumers are well protected is to the CBN's Consumer Protection Department, continually developing frameworks and policies to ensure that financial service providers are being responsible and are being intentional in how they're ensuring that nobody gets left behind in terms of information that is being given. There's transparency, and there's also taking into consideration solutions that can actually further exclude people. So you talked about cost. One of the key barriers to financial inclusion is cost of banking. People in rural communities will talk about charges they're not even aware of, that they don't understand, that they keep debiting from their account. So all of these things are definitely issues, but there's also the efforts on the regulatory side to ensure that these activities and these practices are well monitored and are responsibly delivered, basically, to make sure that the trust that has been generated already or developed does not get further eroded.
Yeah. Well, just briefly now, Chinasa, we saw an improvement between 2020 and 2023. Do you see an improvement in 2024? Do you think that this high cost of living will discourage, further growth of financial inclusion in Nigeria?
So when I talked about the high cost of living, I talked about the correlation between financial health and financial inclusion, which is just basically how healthy are you when there are shocks. And, high cost of living is one of the economic shocks that we're experiencing right now, right? And so if we're able to get people to see that getting banked in the formal system or moving into the formal financial system is actually for their own good and actually protects them from the challenges and the outcomes of, economic shocks, then I think we'll see an improvement. But then we need to get people to a point where their trust is strengthened, and that can look like ensuring that the key players on the supply side are doing the right thing, developing the right products that meet the needs of these segments of people, ensuring that from the regulatory side, certain regulations are put in place that definitely protects the interest of the consumer, and they don't get disenfranchised basically by the system. So specifically to your question, I'd say I am positive that we can see an improvement, just ensuring that we get people to understand what it means for them, basically sharing what the value proposition is of being financially included and demonstrating through the experiences and outcomes or lived experiences of people like them.
All right, Chinasa, well, we do hope activities such as the one, today is the deadline, linking your NIN and your BVN and all of that.
Yes.
And those, we hope that will not come as another discouraging factor. But thank you so much, Chinasa Collins.
Can I comment on that very quickly?
Okay, yeah, real quick, we're out of time.
I want to very quickly. So you know what? I totally agree where there's a threat of further exclusion if it's not done properly. But ensuring your NIN is linked to your SIM and requiring NIN is also another protective layer to ensure that fraudulent activities don't continue and affect consumers. So what we are advocating for at EFINA is to see how the regulators can think of the people who are going to be further excluded if the deadline is still in the timeline that they've given, which we think is too short. It's a welcome policy, but done in the right time, it would be better. If not, then yes, we do face the risk of further exclusion.
Yeah, well, I guess there'll never be a right time. We Nigerians always wait for the on the dying minute. But
there are also ways of ensuring that certain things are in place. So the infrastructural gaps that are no fault, and it's not the fault of the people. It's things that have to happen on the supply side. Having that readiness to ensure that what you're asking for is actually achievable realistically.
All right, Chinesa, we really have to stop there. Thank you so much, Chinesa Collins, so go ahead of Inclusion for All, EFINA.
Thank you.
Okay, let's head to the markets. I guess we could stay there for a bit longer, but there are other parts of the program like the markets now, and it's for the NGX. If we could look at that number on the board at this time, it's a green for the NGX. Intraday 0.79%. It's sustaining that positive close that it had yesterday. For South Africa, is however on the flip side at 0.22%. And Egypt, moving over to Egypt, there we see it's also positive at 0.30% for Egypt. While Kenya, oh man, Kenya. It breaks the heart. But I think we're going to have a conversation later on the program on Kenya. We hope, perhaps let's find out. The inflation tapered. So what's going on? They lost their 93, which was a little bit of comfort for a bit, 92.49. And this obviously is for Thursday, 0.70%. It would be good to go into the minds of the investors there, find out what's driving their sentiment. We move to the Middle East and see that only 2 markets are open on Fridays in the Middle East. So we see that Abu Dhabi intraday is in the green, 0.21%. At 9,274.47, Dubai, very good, almost 1% in the green, 4,350.23. Good Friday market we see here. The other markets are closed on Fridays. That's Saudi Arabia and Qatar. But Saudi Arabia closed positive at 0.15% yesterday, while Qatar closed in the red, 0.12%. Excuse me. And from there, we move to the United States. U.S. stock futures edged low on Friday after the market wrapped up its 4th winning month. And the tech-heavy NASDAQ there, we see, went up just marginally the first closing at 0.04% at 18,089.50. The Dow Jones and the S&P 500 in the red. For the features. Well, let's head over to Washington now, where Maria Bird will give us a little bit of a summary of how the market fared yesterday, Thursday.
The U.S. stock market had a mixed day on Tuesday, as the Dow Jones was down at 0.3%, the S&P 500 up at 0.2%, and the heavy tech NASDAQ also saw an upward swing of 0.4%. Many investors are watching to see what the retail industry says and awaiting the inflation report, as the U.S. economy has been a bit mixed and wanting to see what will happen next, as we've seen quite a bit of a spike in the tech industry, and also Bitcoins have also shown some strength through the U.S. economy. But investors are still watching, as we saw an upward swing last week. This week is showing some mixed signs for the U.S. stock market.
Mixed sentiment right there for the United States. Let's see how the Asian markets closed. Well, I know one thing, that one of them is really doing well. Japan's Nikkei 225 there, just, was it this week they hit the 39,000 and they're really close. Maybe we should extend the market hours for a bit and get them hit 40. They're on a move these days. Gained 1.90%. Kospi is on the flip side, 0.37%, 2,642.36. The Hang Seng Index is positive, 0.47% at 16,589.44. Looking at other markets in that region, we see that Australia ended high at 0.6%. There you have it, and Shanghai also in the green, 0.39%. South Korea's markets were short for the Movement Day holiday. Let's move away from Asia and go to Europe. Talk about German sportswear maker Puma. They're buying back shares worth 100 million euros. Do you want to invest? Well, I don't know, but Lars joins us now to tell us what's driving this and how investors are reacting to it. Hi, Lars. Happy Friday.
Thanks for having me. Yes, at first glance, it looks great what the company is planning. Puma says it plans to return up to 50% of its net income to shareholders through buyback programs and dividends. So a part of this is a massive share buyback program where Puma is spending 100 million euros to buy back their own stock with a stated goal to cancel those shares later. The other way to return money to investors, of course, is through dividend payments, and Puma is changing its dividend policy from paying out 40 instead of the current 25% in future. The company says that business is that good right now and that they are seeing strong and sustainable growth to a point where paying back investors is just the logical thing to do.
So how are investors taking this buyback program?
Well, a whole lot, in fact. Share buybacks, just like dividend payouts, are pretty much the worst way for a company to invest its profits. The best way, obviously, would be to invest it in new infrastructure, maybe growing the company by building a new plant, or more stores, or hire more people, or put it in research and development to come up with new products. That is how things should naturally go. As a matter of fact, for Puma to say that they're seeing strong and sustainable growth is kind of dubious. If they're seeing that kind of growth, wouldn't they have to invest in new products or manufacturing? Also, here's another reason why share buybacks are having a bad rap. They're diluting a company's earnings picture. Usually, earnings are broken down per share, and the number investors are looking at in every quarterly report is actually called earnings per share, or EPS. So if you divide the earnings by fewer shares after a buyback, that would give you higher earnings per share, even in a situation where your real earnings, your profit, might be down or stagnating. On a larger economic scale now, it's a bit worrisome as Puma isn't the only company buying back shares these days. Looking only at Germany, there are insurance giants Allianz and Munich Re, there's Siemens, Infineon, Mercedes-Benz, all companies that are taking steps to appear better than they might really be doing.
All right, so let's look at general investor sentiment over there. How's that looking?
Well, as the week draws to a close, it'll be interesting to see if yesterday's tech rally holds. It came mostly from stocks related to artificial intelligence, chips and such, where, according to one analyst, strong investor sentiment, quote, underscores broader confidence in the potential for technical innovation to fuel economic growth and corporate performance. Generally, it seems that AI is the hottest sector on the markets these days. UBS has just written a piece saying that AI-related stocks could be among the strongest performers this year and even fuel a rally that might take the S&P 500 up by 20%. Those are, of course, some lofty expectations. For now, however, the rally we saw yesterday is...
Welcome back to Watching Business Incorporated right here on Channels Television. We'll start from Kenya, where we had that report of a significant drop to 6.3% in February 2024. Inflation, that's down from 6.9%, which was the data for January. Data from the Kenya National Bureau of Statistics showed that consumer price index during this month, the month under review, that's February, was high compared to the February 2023. And this was attributed to an increase in prices of commodities under transport, which had 10.8%, housing, water, electricity, gas, and other fuels, which stood at 8.4%, food and non-alcoholic beverages, that's 6.9%. Still in Kenya, we see that the number of new vehicles sold in Kenya dropped by 15% in 2023. Data from an industry association showed as new taxes and a weaker currency curbed demand. Although the East African nations' car market is dominated by used imports from Japan, it's been attracting investment from global car makers such as Volkswagen and open new tabs in recent years, buoyed by government attempts to boost local assembly of vehicle. Individuals and businesses bought 11,370 units last year, and the Kenya Motor Industry Association said that was down from 13,352 units sold in 2022. Well, let's delve into this and look at what's happening in Kenya. We also talked about their markets earlier. We saw that there was a deep drop yesterday. With Dominic Omondi, he is a senior business reporter at the Nation Media Group, joins us from Nairobi, the capital of Kenya. Hi, Dominic, good afternoon.
Good afternoon.
Yeah, so I don't know if to say congratulations on the drop in inflation in February, but I guess we would know if to say congratulations when we see it reflect in the everyday buy and sell.
You are right there, and thank you for having me. Yes, until we see, I mean, people tend to be skeptical. It's not just in Kenya, but most African countries. There is certain skepticism when it comes to the numbers that come from the authorities. So people will tend to say, but I'm not feeling it. But the truth is that the numbers coming from the national statistician shows that inflation has been going down from a 5-year high in 2022 when it touched 9.6%. It's been going down. Now it's at around 6.3%, which is, again, a 23-month low. And that is because of the rains that the country recorded towards the end of last year, which boosted agriculture, which, again, plays a very huge part in the Kenya's economy. So most people are employed in the agriculture and constitutes around more than a fifth of the Kenya's GDP.
But what are investors saying? What kind of conversation are they having? Because we saw the stock exchange, Nairobi Stock Exchange. I mean, I think it was late last year, it hit 100. But we've seen it consistently around 92, 93. Now it's dropped to 92. What is the sentiment around investors?
So when you talk about the real economy and the markets, those are two different ballgames when it comes to Kenyan economy. You realize that the benchmark index, the NSE 20, is not dominated by sectors that are big in the Kenyan economy, that's agriculture. And so the sentiments that will tend to influence investor confidence are really different from what is happening in the real economy, because the real economy is dominated by agriculture. The national security exchange, the market is dominated by the telecommunications sector, which is basically Safaricom, Kenya's biggest telecommunications provider. But the sentiments really are driven by different factors. So you're looking at the exchange rate. There's a huge volatility, even though the shilling has strengthened against the dollar. That volatility is still there. There are political considerations to look at. The things to do with interest rates. They're still not attractive to most investors. So there's a breakdown of sorts between what is happening in the economy and what is happening in the markets.
So does this come as an advantage or non-advantage? I mean, when you say what's happening in the market is different from what's going on in the real sector, is that a good or a bad thing for the economy?
Well, I have to say it's not a good thing, because until a time when as a country, we get to fix this disconnect and have as many firms being listed, which are playing a bigger role in the economy, then we will start saying that really some of the capital markets indicators are really barometers of how the health of the economy and how the economy is doing. So it's not a good thing because it doesn't give a clear indicator of how the economy is doing. Yes, partly because if you look at a sector like agriculture, most of it is largely informal. So you don't have companies listing from the agricultural sector because it's dominated by companies that are informal. But going forward, what needs to be done is for the authorities and the country at large to do so much so that they can formalize that sector, make it big, make it attractive, have some of the companies being listed, and so that then it could be easy for investors to track how the economy is doing using the NSE as a barometer.
Do you see the government doing that, working towards, that?
Yes, there's been some movement towards that, and a lot of things are happening. A lot of companies are trying, even the small ones are trying to formalize the businesses and grow big, and basically by taking advantage of the larger East African community market, and that means doing a lot of things to formalize your businesses. That means and also just bringing in some of the latest technologies and doing the business and growing your business. You treat agriculture not as a subsistence kind of activity, but agribusiness, and so make it big, and that way then you will see some of those sectors scaling up and playing a bigger role in the formal economy, and even having them listed at the Nairobi Stock Exchange.
All right, thank you so much. It's an African country, and we know there's some common challenges around, but thank you for sharing your thoughts and time with us this afternoon. Dominic Omodi, Senior Business Reporter with the Nation Media Group.
Thank you.
From Kenya, we go to South Africa, where economist Makwe Maselela warns that implementation of the National Health Insurance Bill in South Africa may necessitate substantial hikes in personal income tax and increased value-added tax, that's VAT. Maselela advises the government to proceed cautiously, ensuring they do not drive South African taxpayers to emigrate or discourage workforce participation, which could also deter foreign direct investment. The bill currently awaits President Cyril Ramaphosa's approval after being passed by both the National Assembly and the National Council of Provinces.
National health insurance is very important and necessary for this country because it's only fair that we all have access to good health care system. But just like any other thing, we need to have the money to be able to fund it. As it stands, we all know that our economy is not doing that great. We know that the fiscal is not working okay. And then the government, we've just seen over the last budget, they are also trying by all means to lessen their borrowings. Hence, they tapped into our reserve from the Reserve Bank. So the question here continues to be affordability. And then one still has to see how creative the guys will be, to get money. And we hope they don't do anything that will chase away the current taxpayers or potential investors going forward.
From South Africa to Ghana, the state-run electricity company of Ghana has cut power supplies to the parliament over a debt of 23 million Ghanaian cedis. That's about $1.8 million. And the outage interrupted a debate on the president's State of the Nation speech. Local media reported that a backup power generator restored power to the chamber a few minutes later, but other parts of the parliament building remained without power for most of the day before supplies were restored. MPs and parliamentary staff who were using the elevator when the abrupt blackout hit were stuck. The power company's communication director, William Boateng, says it had resorted to disconnecting power because of Parliament's refusal to honor demand notices to pay up. Electricity was restored later in the day after Parliament paid 13 million cedi and made a pledge to settle the remaining debts within a week. Parliamentary finance official Ebenezer Ahoma denied that Parliament owed the amount quoted by the power company. I wonder if we could see such in Nigeria soon, because there are also reports that some of those government facilities are owing the power holding company of Nigeria. From there, we move over to Ethiopia, where Ethiopian Airlines Group, which is the largest airline group in Africa, has launched a state-of-the-art e-commerce logistic facility in Addis Ababa, located inside the Ethiopian cargo and logistics premises. The newly built facility is dedicated to e-commerce, mail and courier services, aimed at bridging logistical gaps and positioning Addis Ababa as the cross-border e-commerce logistic hub for Africa and beyond. Ethiopian Airlines Group CEO Mefsin Tasiu said that the inauguration of the cutting-edge e-commerce logistics facility is a significant breakthrough for Ethiopian Airlines Group and the entire African economy. The facility will offer a range of services, including consolidation, deconsolidation, sortation, repackaging, labeling, and a whole lot more. Customers can track and trace their shipments effortlessly from anywhere on the continent. Now let's head to the crypto space now. That space has been bubbling since the MPC, and we heard that big directive and determination by the CBN governor to ensure strict compliance, not just from the BTC, because later on we did hear some news about executive of Binance and all of that. We haven't heard from the government, neither have we heard from Binance, but we have seen that the peer-to-peer feature on Binance has been disabled, and we know that that was brought in when the CBN had said that banks cannot, or investors cannot interact with bank directly when it comes to crypto. So now we wonder what investors are doing. But let's see the numbers right. Bitcoin had gone as high as 63,000. Now we see it in the red at 62,000. I wish I could have the numbers, please. 62,119.76. It's lost 0.61% in just about 24 hours, because yesterday we had about 63,000. Ethereum is also in the red, 0.87% in the red, 3,425.15. But only Solana, and then BCH, there's Bitcoin, and then all of these other small ones we can see. But the major coins are splashed in red at this time. I wonder what's driving this, if this is a Nigerian thing. I don't know. Okay, so now let's talk to Solomon Amunde. Perhaps he can tell us what's going on. Hi, Solomon. Good afternoon. I wonder what's going on in the mind of the crypto community at this time. Binance is not getting it easy from the Nigerian government.
Good afternoon, Ini. A lot is actually going on. Most persons are panicking, but it's not as bad as it was in the first quarter of February 2021, when the government first banned banks being the intermediaries when it comes to buying and selling of crypto, which was what made most persons to switch to peer-to-peer. So it's not that bad currently, because people are more informed now and people are more educated. And we have a few persons that are helping guide these people on what to do and what not to do. So it's not as bad as 2021, but generally speaking, it's not so good at the same time, because we have Binance, which is actually one of the biggest exchanges in Nigeria, that the P2P there was actually halted. So it's not really a good thing. But so far, so the people are doing well. They're actually surviving. I mean, it's an opportunity too for other local P2P platforms and some other smaller ones to actually excel and do well.
Yeah, and I learned there's some local ones too, some local platforms. But I mean, it still boils down to the issue of regulation and relationship between the crypto world and the government. I guess by the time both parties sit down, have an agreement like the US is doing, they're constantly regulating Binance and crypto activities, then there'll be more trust and less of the shocks.
Yeah, I totally agree. But another thing again is this: governments cannot actually regulate or track P2P. It's almost impossible. Like if you understand the true concept of P2P, it's impossible actually for government to track the P2P market and understand what is going on in the market. But if they want to track what's going on in the crypto ecosystem, there's a chance that they can be able to do that. First is by allowing banks to be the intermediaries and letting some persons carry out some of these transactions with their debit card. That would help a long way. At least they can have an insight to what is really happening. But for the P2P, I'm afraid they won't be able to track that or ban that. The best shot is working with the banks and allowing them to work with investors and traders to carry out transactions and activities, which, as you can see in the US, they are gradually trying to make that possible. Most banks have been pushing to have access to custody and let their customers to be able to buy these assets and transact with these assets with these banks. So they're trying. I believe once the US, they give the go-ahead, the SEC gives the go-ahead to the US banks, it's only a matter of time. Other countries will fall in line.
So, Solomon, how would you react to the conversation that, crypto, Binance in this case, which is the most popular, the most populated, has been used for money laundering and shady activities? How do you react to that as a stakeholder in the crypto community?
I would say that is 100% possible. CZ himself admitted that Binance was used to carry out shady activities and money laundering activities in the US. If they did that in the US, I mean, it's 100% possible they also did that in Nigeria and also other countries. It's very, very, very possible. The fact he admitted, and there were proofs backing that up in the US, that they did that, then talk more of Nigeria. It's 100% possible that they've been doing that in Nigeria. Well, I wouldn't say that is what has caused our Naira to lose so much value. That's the area that I would say it's not the fault of Binance that the Naira is losing so much value. It's actually demand of dollar and people being able to get this dollar as stable coins and willing to pay whatever the premium is to get that. That is what has been driving the Naira crash. Again, because once people are eager to get something and they can't get the physical dollar, but they can get the stable coin, and they're willing to pay whatever it takes, because with the stable coin, they can carry out the transactions and make payments and do all sorts of stuff. That is where the issue is coming in. That is where the issue. So the government should be looking at how to make it easy for people to get the actual dollar and also other ways to boost our economy so that the Naira can actually gain strength. Else, it's be a free fall.
Yeah, we hope it doesn't stay that way. What would you say is an ideal regulation for Nigeria at this time? We know that, I mean, you have people like you, investors, who depend on activities in the crypto space to earn their living. But we also know that it's been abused. You know, the platform has been abused. So what would you say would at least close to an ideal regulation to find a balance for everybody?
They should start by allowing banks to be able to process crypto transactions freely, and they should be able to allow banks to do that. And that way, banks can have an idea of the inflow and outflow. Then they should be able to find a break-even point where they can be able to, should I use the word merge? The bureau de change guys that exchange the physical dollar and the exchangers that also exchange the stable coin. You get the ones that do good volume. They should have a way to harmonize both parties so that we can have a common understanding. Because like I said, if the bureau de change, the ones that exchange the physical US dollar, even if they peg their price at 1.4 or 1.5, and people are rushing to buy the stable coin, and the bureau de change guys see the stable coin flying to 1.6, 1.7, 1.8, it's only natural for them to also increase the price of the physical dollar to match with that of the stable coin. So most times we find out that it's demand and supply playing out. So I would say they should find a common ground where they can harmonize these two parties, the big players especially, where they can harmonize them, and we can start from there to discuss on ways that this can be made possible. But banning is the worst way to go about it, and blaming cryptocurrency or P2P is not going to help in any way either, because it can't be stopped. No matter the kind of bans you put in place, people would always find a way to get stable coins. That's the whole idea of cryptocurrency. So that wouldn't yield any positive result at all. It wouldn't.
Now, looking at the price of Bitcoin, we see, I thought the surge was on, but we see a tapering in the price. What's going on? What do we expect for the weekend?
Bitcoin price is overstretched, that's overpumped, and no doubt we've had lots of bullish news, both from the US, the SEC, the ETF volume has been growing every week, every day it's been flying. So I would say right now we're just consolidating. Personally, today is the 1st of March. I would say the month of March would be like the first red candle we'll be seen in the last 6 months. So I'm expecting this month to be like a red candle. What that means is the price of Bitcoin would most likely close less than it started this month. So that's my own bias. That's what I'm expecting. So moving on, I expect Bitcoin to consolidate over the weekend. Mid-month, we might still see a spike up, maybe to try breaking the all-time high of around $69,000. We should see that. Then afterwards, if we are unable to break that, we're going to correct. But if we're able to break that, we might make a new all-time high of around $75,000. So I'm still on the lookout. But generally speaking, the market is bullish. The sentiments are actually bullish. And we have lots of institutional investors looking to gain more opportunity in the market and exposure to their clientele.
All right, Solomon, thank you so much for sharing your views with us.
Thank you very much, Ine.
All right, so that's where we draw the curtains on Business Incorporated. Thank you so much for being a part of it. Do remember, you can watch Business Morning, Business Incorporated on our YouTube channel. It's youtube.com/channelsweb. You can watch any old episodes, including this one. I'll be back next week. Remember, Ladi Williams will be back 7 p.m. tomorrow. Capital Market, to give you a summary of what has happened in the market all through the week. Have a great weekend.